Okay.
She don't reply.
Hey guys, it is
What's
so good
going
to see you
on?
guys again. Yeah, hey guys. So, welcome to another episode of Teach Me Tuesday. Today we have a very, very good topic. We're going to discuss the impact of inflation. I'm pretty sure we all feel it. We can kind of experience, the rising prices, not just from the gas to the groceries to just everyday living. So today we're going to really kind of dive in on how the effects of the Fed raising rates, how that has impacted, the housing market, how it has impacted the demand in the real estate market, and how also it can truly affect just real estate investments in general. So, without further ado, we're just going to introduce ourselves so that way you guys can get to know us a little bit better as we continue to go on with this great topic. So, my name is LaShawn Abraham. I am half of the Team Abraham team. I am a local loan officer in our Summerville, South Carolina location, where I serve as our sales manager, but I also originate loans. And so next we have my other half.
Yeah, this is Gavin Abraham, loan officer here in Somerville, and guys, excited about today's topic, talking about inflation, and we're just here to serve the community, serve you guys on Facebook and all the social media sites, and hope you engage and get something out of it.
Oh yeah, oh yeah. Last Wilmot Berry with the Berry Group brokered by EXP Realty here in Orangeburg, South Carolina, serving the surrounding areas as well, helping my people reach their real estate goals.
We're good. We're good, good, good.
Yeah.
So let's jump into this topic of inflation. So, just in general, when you think about the word inflation, I mean, what comes to mind? Like for me, I just think about like higher prices. I mean, that's kind of like the biggest thing that kind of sticks with me is that things are now costing more. And so, with the impact of things costing more and necessarily not people's income increasing, I mean, that can have a true impact on just how things are going, right? And so, what have you guys been seeing so far? I guess probably just with some of the clients that we're serving, just where they're at with really trying to shift their mindset on, man, like I could have bought a house at 300 earlier this year, and now it's looking more like 250. So what do you?
Absolutely. Like you said, LaShawn, it's the increase, it's the rise in the prices with the decreasing of purchasing power. It's a combination of the two. And I do feel like a lot of people are seeing that. I mean, we are seeing, the increase in prices along with, especially if you work on a job and your salary hasn't went up, or even if you're saving money, guess what? You being affected by inflation at this point. So, yeah.
Yeah, I mean, just to jump in and add to that, like, I mean, guys, we know not only for the housing market, but the everyday essentials has just risen. Gas, food. Um, you know, I remember not too long ago when there was a dollar menu somewhere, but that just doesn't exist nowadays.
I know, right?
So, guys, I mean, to go out and feed a family of four, I mean, it's ridiculous. Um,
Mm.
you almost spend you know $100, $75 to $100 on just what would used to be just an average meal. But guy, I mean, so it's definitely hurting. The It's hurting people's willingness to purchase and their budgeting, because I mean, you can be approved for whatever it might be, but outside of being approved for, let's say 350,000 that doesn't mean that you can afford and what your budget to be because of all the other circumstantial things that you pay for in life. Such as food, such as daycare. Everything has risen because of inflation, um, and it's just, again, I know we talked about it being a perfect storm. Well, home prices have risen, interest rates have gone up, um, and inflation with commodities and things of that sort have just all created a perfect storm to where affordability is now a little bit harder than ever.
Yeah, I totally agree. I totally agree with that. Just because if you truly think about it, as we, talk about this subject of inflation and the impact that it's having on, the mortgage and real estate industry, when it actually comes to, mortgage rates going up. I mean, I think the Fed has now raised rates now at least, 3 to 4 times this year alone, and we're in the month of October. And so if a
Mm-hmm.
person was pre-approved, back in January, February of this year, they could have potentially been having, a rate somewhere maybe in the high fours, maybe fives. And today, I mean, rates are pretty much knocking on 8%. I mean, they're in the mid sevens, depending on what type of loan you are
Yeah.
eligible for. And in addition to that, this is for people who have great credit, because we get the calls all the time. Well, I have an 800 credit score. So, what, I should be able to get, a lower rate. And I'm like, I mean, credit score does, play a part in where your rate is going to be. But if rates are already just at what we call like a par level, and the rate is starting off at that 7.5, 8%, even if you have an 800 credit score, that's where the rates are, it can truly impact what we call your
Mm,
eligibility. Right.
yeah.
So I know when you, you on the other side of this, you're, trying to, speak with clients and, taking them out, showing houses. How are your, clients kind of dealing with just where rates are? Are you finding yourself having more conversations regarding, yeah, this is where we are?
Yeah. I mean, and what I'm noticing from clients, they are seeing the increase in rates. They are seeing like, hey, I could have bought more house last
Uh-huh.
year, because of the lower interest rates. Um, but also, so let me twist it a little bit too, because I deal with different types of clients. I deal with your everyday home buyer,
Yeah.
but I also deal with investors as well.
Uh-huh.
Um, so so they're looking at this in a different way. And I want to kind of pause it right here, because I want us to understand inflation and the pros and cons to inflation, right?
Uh-huh.
Because like it's not all negative,
Oh
right?
yeah.
See, a lot of people when they hear that, a lot of them, they think about the negative side. Oh, my money isn't going to go a long way. Well, it's some people that said, hey, well, I'm going to invest in real estate, which is a real asset, and it
Mhm.
kind of is almost like a hedge for inflation. Okay, so for example, like if you purchased a home, let's say 5 years ago, right? You really are in a good position. Why is that? It's because, guess what? You locked in at a certain interest rate, you know, you're locked in at a certain purchase price, most likely you're probably sitting on some equity right now.
Yeah,
But
probably a
because
good bit.
exactly. So inflation actually helped those particular people that actually invested in real estate. You see what I'm saying? So
Uh-huh.
now if you're sitting on a lot of cash, no, this is not a good time for you. Why? Is because that same, let's say you were putting some money away in your savings account and you had a big lump sum there. Let's say you was feeling real good about that lump sum sitting in that savings, and it's sitting there, and guess what? It might be the same amount that you put in there, but guess what? It's not worth the same because of inflation. You see what I'm saying?
Yeah.
So it's really dependent on how you look at inflation. Now, if you're in the market now looking to purchase property, guess what? It's still not a bad time to buy. Why is that? Because if more inflation is to come, guess what? You're going to see more appreciation of properties. Okay, you're going to be putting your money in a hard or in a real asset at this point. So at this point, I want you to look at it like this. I always tell people, hey, when you invest in real estate, you're not just doing it just to, when you buy a house, you're not just doing it just to live somewhere. Hey, you're making a really good investment, for now and for the future. So Yeah.
That's well said. I mean, I think the way that you articulated that, you even opened my mind to think about, there are pros and cons to inflation. And because right now, for an investor or even for someone who have, like you said, bought previously, I mean,
Yeah.
they are, they're winning. You know what I mean? They have inflation has been a great benefit to those type of
Yeah.
um, people who decided to invest. And I totally agree with you again in regards to, real estate it's an asset. And so instead of, to me, it's going to yield a much higher return than any other thing that you decide to stick your money in, whether that's a savings or checking account, a money market account, even some stocks or certificates that you get from your bank. They're not going to pay you back the rate of return like real
Mm-hmm.
estate will. So if you're
Exactly.
thinking about it from that mindset, it's not a bad thing. It is still a pro in my opinion as well. So that's a great point. So thank you for pointing that out. Um, the next part of this is we're going to talk about just the housing demand because we also know that inflation has
Mhm.
impacted, just the demand of housing. And so it seems like a lot of buyers and sellers, I would say on both sides, are on the fence because there's not as much inventory available. So the demand is high. And then kind of like what you said, Gavin, with the perfect storm, you couple that with where we are with rates as well, you know, inflation does have an impact on what's available and how quickly or slowly people are trying to kind of inch in that, so we can kind of talk about that too.
Yeah. So I mean, what one thing that we've kind of what we're seeing now, I mean, when inflation really was, and I'm gonna just refer to it as COVID inflation. Um,
Hmm.
when it first started, I mean, the market was kind of flooded with buyers, and sellers. I mean, the demand was so high, so there was so many people looking to purchase, because rates were still relatively low at the beginning of this new inflation increase. But what we're seeing now is homes are starting to sit on the market sometimes a little bit longer now.
Mm-hmm.
Um,
Mm-hmm.
the the direction, like there've been new opportunities, so there have been new opportunities for buyers to now get possible closing costs to negotiate different things because of, with the inflation, a lot more people who were invested in wanting to get into the market have kind of backed away,
Mm-hmm.
not only because of affordability but just because, um, you know it they can't. Well, no, it is because affordability. Excuse me, for affordability, they can't purchase right now. So it gives other buyers who are able to purchase, who are ready to purchase in this market, and who can,
Mm-hmm.
more flexibility to for different things like, um, temporary buy downs or more permanent buy downs. Just the negotiation factor, to get these homes that have been sitting on the market a little bit longer, even though the demand for homes is still high because the inventory hasn't, it hasn't peaked to where it's going to meet demand yet, and that's why we're in an inflation period. Um, but people are, like I said, it opens up the door for new creativity on how
Mm-hmm.
to buy a home, and
Mm-hmm.
there we have all gotten more creative in the way that we do business and the especially in the lending world, the products that we offer, and with Wilmot, I know with how you have to, um, you know, create an offer for a sell for a buyer, or what you're looking at accepting for a seller. I mean, I know that all goes together, and
Yeah.
so it's
Yeah.
definitely a new opportunity in a different market that we're in right now.
So Gavin, I want to comment on something you said, man. You talked about demand, right?
Hmm.
So demand is one of the key factors to inflation. Okay. So it's three major factors, and demand is one of them. They call it demand pull, you know.
Hmm.
So it's like when an item is scarce. That's why when last year when we had that crazy market, prices was going through the roof. Why? Because housing still is to a degree somewhat scarce. Okay. Especially that's why you seeing these builders really ramping up the buildings, the houses right now, is because hey, there's still a high demand there for buyers to get into a home. And so that's one of the major factors to inflation, coupled with, hey, what we call a cost push. So remember when, I don't know, it was about a couple weeks ago, Gavin, I love econ. So this is right down my alley, econ, right? So cost push. What is that? And we're like, what is Wilmot talking about? So cost push is when the costs for goods and services increase. Okay. So for instance, I'm drinking a cup of coffee right now, and I can probably go get this cup of coffee from Starbucks for maybe $5, right? But if you think about it, maybe let's say 5 or 6 years ago, I probably can get that same cup of coffee for maybe $3. The cost to produce it went up, so they pushed that on to the consumer at that point. That actually happened with new builds. Okay.
Yep.
The cost to construct those new builds, the lumber prices went up. So what happened? Hey, the cost, I had a client, we were under contract on a property, and I think it was like for 200,000. Then I got an email, and the contractor said we're gonna have to go up on our prices $50,000 because of the cost to build. Okay. So that cost push will also push, inflation up. Demand will push inflation up. And one last thing is, hey guys, if you got that stimulus, guess what? They printed money. Okay. The government printed money. All right. That will also cause inflation. And what it will cause inflation? Why? Because you have an increase of supply of money that's going to decrease the value of the dollar. Okay. So that's just something I want all of us to think about. It's like the more money that we get from the government, or the more money they print, guess what? The value of that dollar will go down, which will cause inflation to occur. So, yeah.
One thing that popped in my head, how they, even with the cost push, how the saying, time is money. So not only, you got to think about it also from this aspect, when you have, and that's also being pushed to the consumer, when you have these builders who now, where ports are backed up with materials, with lumber that's being imported in, or whatever it may be, and now they're having to keep their construction crews around longer because they're waiting on supplies to come in. They're incurring costs. They're incurring, and it's time. It's because, we can't build until we have the materials to do so. And so that also caused a huge part to the consumer push. Say the term for me one more time. The
cost
push. Cost push. Just because of time, and time is money, and it's evident.
Absolutely.
That's
absolutely.
That's really good stuff. Were you gonna say something, Wilmot?
Well, no, I was just agreeing with what Gavin said, and we talk about the impact on real estate. One of the things people don't talk about is during times of inflation, rents typically go up. So you can look at that two ways. You can look at that from a renter. It's like, oh man, inflation, my rent's going up. Or you can look at it from an investor and say, oh man, I get to increase rents. You know what I'm saying? So it's a pro and a con at the same time. And I want all of our guests to understand, like, hey, during periods of inflation, there are pros and cons. Let's try to be on that pro side instead of being on the con side, and invest in a real asset, which is real estate, that can hedge you from that inflation.
Yeah, I totally agree. And so one of the other things that we love to do as well, we like to we do these videos And we do these lives so that we are, one, educating you guys on, what's going on in the market, keeping you guys abreast of, creative ways to work through things. Because if you have a desire to purchase a home, knowing this information, having these strategies, having these tactics, having these talking points would kind of help you make a better informed decision on how you, would like to move forward in this process. So as we talk about the, inflation and the demands that, it has had and how it has changed, a little bit of the housing market, one of the things that we want to do as well is give you guys solutions. We want to give you guys, some tips and solutions on how to, it's almost like surfing. You don't want to go against the wave, but how to kind of ride the wave as things are going
Mhm.
on. Because a lot of times what ends up happening is we get the conversations, and I'm pretty sure you got them too. Well, I'm just going to wait, but I'm just going to wait. But sometimes waiting can cost you more, and waiting is not always going to be the
Yeah.
solution, because that house price, as both Gavin and Wilma has already explained, it might continue to go up. I mean, the prices of houses hasn't went down since COVID. They either stayed the same or slightly kind of ticked up. So if you decide to wait till next year and buy a house and rates don't go down, or rates don't go down to what you're, hoping them to go down to, then what should you do, right? We have this term, marry the house, date the rate. And so what that
Yeah.
means is, if you find a house that checks off the boxes, is in the school district for your children, it has the bedrooms, it has the square footage,
Mhm.
buy it. That rate, that payment can always be adjusted, because there's no limit to the amount of times that a person can refinance. There are products like Gavin mentioned called temporary buy downs to help you
Mm.
curb the cost. I mean, there are adjustable rate mortgages, there's different terms mortgages, there's different grants and down payment assistance. There's so many different things out there to help curb the cost. But the first thing that I tell everybody is that, one, you have to kind of make the decision and truly commit to the process, and then you just have to plan and budget accordingly. Because as Gavin mentioned, you may be eligible for one thing, but you may not be able to truly afford what you're eligible for. So
Mhm.
you have to kind of take inventory of your own personal finances and really think about, gas, food, electricities, utilities, internet, if you have daycare, private school, whatever your personal lifestyle is, and then think about, okay, if I want to buy a house, I need to stay within these parameters, but also
Mm.
be realistic, being realistic as well, and how to truly, connect the dots. And that's what we are here for. We are here to kind of help you, figure that out, guide you, and provide you with the resources and tools to do so.
Well said.
Absolutely.
I mean, definitely, guys. LaShawn couldn't said it better in regards to knowing that there are solutions to any problem or any concern that you have with, making that leap in regards to jumping in and making the investment in your future, and obtaining the dream that you desire in regards to home ownership. So, or investment opportunities. There are ways, and like I said, we have become very creative in our areas of expertise on how to make things more attainable, when they seem so far out of reach, just because of, you constantly are being not poisoned but pushed in your mind through media that
Conditioned.
yeah, that oh man, the housing market, it's going to be a another
Recession.
2008.
recession,
Yeah.
and home prices just too high, interest rates are too high, and now is not a good time to buy. Who who says now is not a good time to buy? Are they telling you it's a good time to rent? Are they telling you it's a good? If it's not a good time to buy, then what is it a good time for? Has
Yeah.
anyone
That's
ever
good.
has
I
anyone
like
ever
that.
came to you and said, "Yeah, it's not time to buy, but what is the other solution? What is the other? What are they telling you? Hey, pay the $2,000 to $2,500 in rent that continuously goes up, that you're struggling with, but don't go buy a house and fix your payment and have a source of wealth building and equity." It don't make sense to me. But again, that's why we're here to educate and just give people, a different way of thinking, which I'm also excited about because it goes into our next week's topic. But I'm not going to not gonna jump on that. We'll wrap up here and leave that for next week.
Absolutely, Gavin. I enjoy these sessions because not only do we get to, educate, but also, man, it makes us better. It makes us stay on our P's and Q's and find different options and solutions for our people, for our clients, and so that we can better serve you. So you can have a one track mind and continue doing what you're doing, or you can continue to grow and bigger and better things are to come. So truly enjoy these sessions. I look forward to next week.
Sweet.
Same here. So we kind of going to wrap up a little bit early. So definitely, guys, if you have any questions, we definitely want to make this as interactive as possible. Even if you go back and watch this, not live, but just as you see it in our feed, or if we repost it, definitely still continue to comment. Continue to drop your questions in the chat, because we'll still get them even after the video stops going live. And if there's any topic that you want us to tackle, something that you're curious about, or something that you guys are wanting to know more information about, definitely reach out to us as well. We'll definitely give you our ways to find us or follow us, so that way that information can get to us, because we definitely want to continue to make these videos and lives as engaging as possible, so that we can continue to provide you guys with the information that you guys are looking for. Because at the end of the day, we're all here to, I call it do life together. We're all here to call to really provide this service to you guys, so that you guys are better informed, so that you can continue to set your life on a better trajectory for your family and for your future. So so I would say, Wilma, how can they find you? How can they find you if they want to reach you? Where are you at?
Well, so first of all, I ain't afraid to give you my phone number. So I'm gonna give you my phone number. My phone number is 803-347-3329. You can call or text. Okay. Also, you can find me on social media platforms, Instagram or Facebook. I'm on Instagram, the Berry Group, and also on Facebook, Wilmot Berry, or the Berry Group, brokered by eXp Realty. Also, you can find this recording on YouTube as well, so you can check out our YouTube channel. It's going to be the Berry Group on YouTube, brokered by eXp Realty. So you can find us on all different type of platforms, social media platforms. That's how you can find me. Yeah.
I felt like Wilmot was on the Breakfast Club just now.
I know, right?
He was wrapping it up with.
Where can they find you, Mr. Abraham?
In the 809, they can find me on Facebook, Gavin Abraham. I think Instagram is Mr. Get Her Done.
Get her done.
And that's what we do. We get her done.
Get her done.
One way or the other.
I love
it. And then also, guys, phone number 803-707-6809. But if you need to, get in contact with me urgently, just slide in the DMs.
Well, good deal. And lastly, you guys, you can definitely find me locally. I am in Summerville, South Carolina. We're in the heart of downtown Summerville. So if you're ever in the area, we are typically here Monday through Friday. You can stop by the office and see us. Social media wise, I am on all platforms. I actually just got TikTok. I feel like I'm old, but I just got it. So you can definitely follow me on TikTok as well. LaShawn Abraham. That's typically my name on all platforms, which is Facebook, Instagram. I'm also on LinkedIn as well. So just LaShawn Abraham _mortgage lady. And on YouTube, we do have a YouTube channel, which is just Team Abraham, all things mortgage. We do kind of go back and post these videos there as well, in case you missed it. So until next time, you don't want to miss it. We have a very great video coming up, a topic coming up to talk about next week. So we definitely look forward to that.
Happy Halloween, guys.
Oh yeah, happy Halloween. All right.
Trick or treat.
Yeah.
Bye.
All right. Have a good one.